Hey, good afternoon, everyone. I'm Senator Arthur Ellis, Joint Chair of the Joint Committee on the Management of Public Funds. This is our second hearing during the interim. And today's hearing will, of course, open remarks by myself and the House Chair, Courtney Watson, will come next. And we'll get an update on activities of the State Treasurer's Office. Treasurer is here with us, Davis. We'll also hear from the Department of Commerce, Secretary Anderson, for Meridian Management Group, Mr. Tucker, and also from Maryland Technology Development Corporation, TEDCO, and Marbitco, and their respective directors. And then we'll just offer some closing remarks, and we'll go forward. I would like to welcome our Senate members. I see our brand new Finance Chair, Senator Botto, is here. And welcome and congratulations, Madam Chair, and other Senate members, Senator Corderman and James. And I'll turn over to Delegate Chair Watson for her remarks, and she'll introduce Treasurer Davis, and we'll get the hearing going.
Thank you, Mr. Chair. I really don't have anything to add to that agenda, and we will begin with Treasurer Derek Davis.
You're muted, sir. And
how's that?
Perfect.
Right.
Thank you.
I'm still getting the hang of this after 3 or 4 years.
And you know you have to start over, right? Start over.
Let me once again say good afternoon, Chair Ellis, Chair Watson, and members of the committee. Let me also congratulate our new chairwoman, Bidle, on her recent appointment. Congratulations, and it certainly is well deserved. As you all know, I am Derek Davis, Treasurer for the state of Maryland. I want to thank you for this opportunity to talk about the work that my office has done since last year. For many years, these updates have covered the traditional banking, debt management, insurance, investment work that Treasury employees perform. It should come as no surprise that this year's update will have a slightly different focus, given the challenging new responsibilities that the General Assembly asked me to take on, specifically reforming the state's 529 program. For this reason, our presentation will be called 2023, A Year of Growth. With the addition of Maryland 529, as well as 9 new positions across other divisions, the office of 50 to 60 professionals grew by 32 positions. Our fiscal expertise also deepened as we had to quickly educate ourselves on the mechanics of college savings plans while addressing an ongoing crisis and managing our other work. If I can, I would like to briefly walk you through a timeline so that you can understand how we got to where we are today. If we can go to slide 2, please. All right. There we go. On February 21st, you and your colleagues elected me for a 4-year term as state treasurer. Move on to the next slide. On April 10th, also known as sine die, the General Assembly appropriated funds and passed several key pieces of legislation that transformed the state treasurer's office. This includes all 3 departmental bills we requested, which passed with the Joint Committee support. A special thank you to Chair Watson for helping to shepherd the bills through the House. In addition, Senate Bill 959 passed, which transferred oversight of the Maryland 529 program and making me the sole fiduciary effective on June 1. 2 weeks later, on April 24th, Governor Moore signed Senate Bill 959 into law. Slide 4, please. We began to discuss the heavy lifting that my office undertook to implement the law and open a new chapter for the Maryland Prepaid College Trust. Leading up to the transition on June 1, my team and I began holding frequent meetings to understand what happened and what needed to be done to address the issue. We knew that time was of the essence and understood that families could not afford to wait 5 more weeks for progress to be made. In addition to the meetings, we set up an email address, maryland529@treasurer.state.md.us, to correspond with our account holders. This was especially important to me because for several months, there had been no way for account holders to contact Maryland 529 directly with questions or concerns. In May, I requested that account holders submit written testimony, and we convened a virtual listening session to hear oral testimony. On July 10th, less than 5 weeks after assuming responsibility for the program, I released a 47-page memorandum announcing 4 phases of policy change for the prepaid plan. Phase 1 established a 6% retroactive earnings rate on historical account balances. Phase 2 updated the online portal to automatically reflect new account balances. Phase 3, which we're currently in, established and announced the parameters for claims. And Phase 4 will specify that the earnings rate will switch to 0% on prepaid accounts on or before July 1, 2024. My team spent countless hours writing and refining this memorandum. If you would like to learn more about what caused the issues with the prepaid plan and the changes that I am implementing to reform it, I would encourage you to review the memorandum. Following the announcement on July 10th, my staff and I focused on working with the state's vendor to make sure that account holders would soon be able to view and access their updated account values in the online portal. Slide 5, please. On August 21st, I announced that the online portal had been updated, completing phase 2 of the policy change. On October 4th, we notified account holders that we had developed procedures to inform the claims process and open up an online claims portal. Slide 6, please. I referenced that under the reform law, account holders had until the end of the year to file a claim related to the most recent issue. Again, that was under the law that was passed by the General Assembly. We sent postcards and emails, issued a press release, and posted on our social media channels to make sure everyone who wants to file does so by the deadline. The final change will occur on or before July 1st, 2024, when the prepaid plan will transition to a defined benefit plan. This will both simplify the administration of the prepaid plan and align it with what my team and I understand to be the General Assembly's legislative intent. Now that we have run through the timeline, I'd like to briefly highlight a few additional points about Maryland 529 and the State Treasurer's Office's other divisions. Please advance to slide 7. While we have been talking about the prepaid plan, there are actually 3 programs under Maryland 529. The number 1 is the prepaid plan, which is managed by Intuition. Number 2, the Maryland College Investment Plan, which is managed by T. Rowe Price. And number 3, the Maryland ABRO program, which is managed by Vestwell. So that you can have a sense of the size of each one. Slide 7, please. It lists the number of funded accounts in each program. So I'll let you look at that and we'll keep going. The College Investment Plan is the largest with 280,000 beneficiaries and $8.62 billion in assets and under management, followed by the prepaid plan, which has 30,000 active accounts and $1.02 billion in assets under management. And this is followed by the ABRO program, which has 5,700 funded accounts and 70.15 million in assets under management. Moving on to investments on slide 8, you can see that the par value of the general fund investment portfolio was $20.8 billion as of September 30th. The portfolio has earned an average of 4.28% this fiscal year to date, with a year-to-date gross interest earning of $226.85 million. I should note that the legislation that we discussed at the meeting last year has become law, creating more flexibility in the way that we manage the state's investment portfolio. Slide 8 also covers the performance of the Maryland local government investment pool, which reflected a balance of $11.56 billion with an effective annual yield of 5.42%. Slide 9, please. On slide 9, you will see that the State Treasurer's Office Banking Division has had a productive year as well, monitoring 1,461 agency bank accounts at 22 financial institutions and continuing to reconcile the accounts down to the penny against the state's ledger system. Slide 10, it covers the details from the March bond sale in which the State Treasurer's Office's Debt Management Division facilitated yet another successful sale. The state issued $400 million in new money bonds and received 21 bids across 3 bidding groups, demonstrating the desirability of Maryland's general obligation bonds. Slide 11. The State Treasurer's Office Insurance Division processed 3,674 new claims and closed 4,182 claims in fiscal year 2023. In addition, they work with the Attorney General's office to handle a rolling docket of approximately 150 to 175 cases in various stages of litigation. The last slide, if you will, it touches on the State Treasurer's Office's priorities for 2024. We're still finalizing our legislative agenda, but would be happy to send a summary to the Joint Committee members once it has been finalized. In general, I remain committed to modernizing and raising the profile of the office. My team and I have made great progress towards those ends, and we will continue to look for opportunities to partner with the General Assembly to facilitate our work. Thank you for your time, and I would be happy to answer any questions. Thank you.
Thank you very much, Treasurer Davis. Will you be able to share your slides with the committee?
Absolutely.
So thank you so much.
We'll get that to each of the members as quickly as possible.
Okay, yeah, thank you so much. One quick question on the second to the last slide. You had a number with the cases closed and the process. You had, let's see, 3,674 new claims and closed 4,000 claims. So what does that mean? Was there a backlog of claims from previous year?
Correct.
Okay, so you're actually closing out much more that were closed out in the past.
Yes.
Is that a good assumption? Okay, great. Thank you for that. Let's see if any members have any questions. Chair Watson.
Thank you, Mr. Co-Chair. The work that the treasurer and his dedicated staff have done on the college program has really been unprecedented for the treasurer's office, I know, with everything else that you have to do. So we thank you for that. And it sounds like from the legislator perspective anyway, we are not getting the volume of concerns that we had from the account holders. So thank you for all the work you've done there. Thank you to your staff. Hopefully that will continue to go smoothly and not be a problem this coming year. I wanted to ask about the state investment policy, the bill that was passed in 2023 that required the treasurer to specify maximum asset classes. Where are we on that?
If I can, Delegate Watson, I'd like to hand that over to Laura Addis. Can you take that one for me, Laura?
Sure, Mr. Treasurer. Hi, Delegate Watson, Chair Watson. Thank you for the question. I, you know, when we had our legislation go through last session, at the time we hadn't anticipated that 529 would be coming our way. And so, to be quite honest with you, our focus has been on fixing the problems associated with the prepaid plan and getting everything squared away with that. So I guess if I could accept responsibility, I know that this is something that's been our investment team has been focused on, but I have had to focus on other things. We do have Keith Morris on the call, who's the Chief Investment Officer for the state. And so he may be able to talk more with you about the particulars. He's formalized the proposal, but I don't believe it's been made public yet. So Mr. Morris, if you wouldn't mind just providing some detail for the committee, and then we can certainly follow up with you as we approach getting the regulations in good shape.
Yes, and to be clear, you're not required to have it together yet. You know,
right.
So it's okay. I just really wanted an update, but thank you.
Thanks, Laura, and thank you for taking the time. We appreciate the support you folks had given us. I was just going to share my screen real quickly and show you something right here as soon as I pull it up. So the policy, can you guys all see this right up here? List of assets.
Yes.
Okay, so we have put the policy together, and as Laura mentioned, it just had to go through a couple of, making sure all the I's were dotted and T's were crossed, and that we've fulfilled our obligation to make sure we're doing the right thing for the state, excuse me, the population and everybody else whose money we're investing. So we have put together a pretty comprehensive package. We reviewed all the plans and all the other states that have AAA ratings and made sure that we were doing at least as much, if not more, from a security standpoint and liquidity. The portfolio has actually performed very well this year. We've taken advantage of the short end of the curve with the way the Federal Reserve has raised rates. The Federal Reserve actually is meeting today, and we'll have they're probably not going to raise rates today, but interest rates should stay relatively high for the foreseeable future. But as you can see on this, we did go out, we solicited questions from a lot of the constituents with regard to our counties and whatnot that had money invested with our MILJIP fund. And this looks to be a pretty good, solid mix. And as Laura mentioned, this will get posted on the website. We were actually working on that the last 2 days once we got the 529 issues in line with where we needed them. So can I answer any specific questions about the policy or anything else?
I just want to clarify for the people on the phone call and whoever could possibly be watching this meeting. The treasurer had regulations already for diversification, right? I mean, some of what you've put up on the screen is already in the investment policy that I have in front of me. So I'm just asking you to clarify, was the legislature asking you to insert maximums, or what is it that you didn't have that you are now going to be adopting as regulations based on the bill that we passed?
Okay. Sure. The bill that passed gave us a little bit more flexibility and allowed us to add different asset classes to the mix, including additional short end securities that are AAA rated and gives us a little bit more liquidity. The portfolio, when the policy that you're probably looking at was first established, I want to say it was 2006 or 2007. And as we discussed at that time, the portfolio was $6 or $7 billion. And we've been running in the $20 to $24 billion, depending on time of year, with regard to tax flows and whatnot and expenditures. So we were running out of options on where we could place funds. And with the way the interest rates have moved dramatically, we were leaving a lot of resources on the table that we were not able to bring back to the state and the constituents. And so this gave us a lot more flexibility with significant liquidity and security. Everything we have in there is very high grade. AAA or what. And even when we have looked at some other asset classes, we've made sure that we've had insurance of liquidity and safety, which is our number one priority.
So just to wrap this up, and I apologize if you can hear that lawnmower in the background. When you adopt these regulations, will you be sending it to the committee and will you be highlighting the differences?
We certainly can do that, and it will get posted on the Treasurer's website where the current policy is. We are currently posting the portfolio of securities in there. So there are some of these that have actually taken place because the law got changed as of the beginning of or June 1st, excuse me. But yes, we'll make sure you get that.
Thank you.
Thank you.
So really, any other members have any additional questions, please? So Ms. Morris, question for you. That display you put up, it had a percentage for each asset class, I think. Some of them are like 100% and 75%. So it's like, how do you, so it's like maximum percent of the portfolio. So like with U.S. Treasury obligations, 100%, you're saying the entire portfolio could just have all Treasury obligations and nothing else. Is
That's correct, sir. It'd be a maximum percentage of the portfolio. If you look down at number 10 on there, local government investment pool. So that is the MILJIP fund. The treasurer's portfolio, we have a particular dollar amount there, but we made sure we put 100% on there for some of our smaller entities, some of the counties, some of the school boards, some of the people that have money in the Maryland Liquidity Fund needed a place to put all of their assets, and so we tweaked that. But if you look up and down the list there, the various percentages are of the total portfolio. So obviously, if we had 100% in treasuries, we'd have nothing else in there, et cetera.
Correct. So do you have a chart that you could share? Tell us what the mix is now, as of this moment?
Certainly. If you give me 1 second, I'll pull it up.
And if I can, guys, while Keith is pulling it up, I'd like to say, and Keith, correct me if my numbers are a little bit off, but essentially for this past fiscal year, the deficit that was being projected was a lot lower because of investment money that Keith was able to do. That was able to cover some of the other hole. So I think we ended up being like 50 million, if I'm not mistaken, short, instead of like 350 million. And again, that a lot of that was attributed to the investment income that we were able to make. So we're certainly thrilled about what he's been able to do to help our budget situation.
Okay, great. Yeah.
Can you see this pie chart here? I'm not sure if that screen is being shared.
No.
No.
Okay, hold on 1 sec for me. I apologize. Let me just stop sharing there for a second, and then let me find something share. No. Okay. So can you see this pie chart now?
Yes.
Yes.
Okay. So this shows a breakdown of the various asset classes right now. There was a number that was presented earlier in the slides by Treasurer Davis that showed our portfolio overall is yielding roughly around 428. It's actually a little bit higher right now. It's about 445. We have done an exceptional job this year, and I'm not going to pat myself on the back as interest rates have moved higher, that everything we've done in fiscal year 23 and starting in fiscal year 24 has been in the 5 and change range. The problem is we did inherit a lot of securities that were in the portfolio from several years ago that have a lower coupon, and it's just kind of the nature of that. And that's why the overall investment is a little bit lower than the current rate of the market. And that's that larger kind of tannish color, which is the 26%. That was some of the agency securities. Again, they are fully liquid, they are AAA, but they have lower coupons on them, coupon interest from years ago. And then you can see the rest of the breakdown of the various securities in there that we have. This gets posted monthly. I'll be posting the October numbers probably today or tomorrow. It'll get up on our website, and every one of the monthly portfolios, including all the details, summaries, et cetera, are on the website. And I can actually, well, you can see it up here on the top, kind of gives the par values of the current securities. And this is as of today, we're roughly about $22 billion or $21.7 billion in the portfolio.
Okay. Well, thank you for that. I appreciate that graph and that explanation and your definitely meticulous work in having those really tremendous rate of returns for the state. Chair Watson.
Just to close out that discussion, just tell me if I'm correct here, but for example, in the previous policy, commercial paper was 10%, and with what you're bringing forward, you will likely propose that it be 35% max, and it's currently in the chart you just showed us 27%. Am I reading all of that right?
That's correct, Chair Watson. We went to 35%. Again, these are all very, very high quality assets and very short term, and it gave us the ability to earn extra interest on it. And a lot of these things mature in a month or 2 months or 3 months. But yes, that's 35%, and roughly is, I think it's 27% right now, or 26, 27%.
Okay, and then for example, money markets, which was previously listed at 30%, you're going to recommend that it go to 50%, and it's currently at 17%.
That's correct.
Okay, so you are already instituting the
Yes, ma'am. So the law, once it got passed, and we had our conversations, they are being used. Those percentages are in the policy. And again, the reason it hasn't gone online is we were just finishing up with the 529 before to get posted. But that is the policy, that is, and we'll get that out to you as soon as it's finalized.
Thank you.
Okay, one more questions from members. Derek Davis, Treasurer Davis, and team, thank you so much for being here and the information you provide, and follow up with us with those things we requested. That'll be really appreciated, and you'll have a good day. And
thank you all again. I definitely appreciated all of the support you've given the committee. I ask a favor, if I ever open my mouth to volunteer for anything else, just ignore me. I don't know what I'm talking about, but the real heroes of this are the guys you see behind me: John Martin, Kate Allen, Dave Chase, and Laura Addis, Keith Morris. They made my job easy. They are the real heroes in this. They spent countless hours, whether it's the investment stuff for Keith and the 529 for everyone else. They did the work, and I'm honored to have a great team. So thank you all for everything that you've done, and have a great rest of your day.
thank you, you too. So we'd love to move forward on the hearing with Secretary of Commerce, Kevin Anderson. Thank you for being here. And as you can start your presentation at will and introduce your other team members as they appear before us.
Fantastic. Are we all set?
We're
Great.
all
Good afternoon, Chair Ellis, Chair Watson, and members of the Joint Committee. For the record, I'm Kevin Anderson, Secretary of the Maryland Department of Commerce. I'm joined today by Jarrell Registry, Commerce's Chief of Staff, Andy Fish, Commerce's Senior Director of the Office of Finance Programs, and Jennifer Lahette, Managing Director of our Office of Policy Research and Government Affairs. Thanks so much for the opportunity to speak with you today so we can provide an update on several of Maryland Commerce's business assistance programs, including 2 recently established programs to support childcare providers in the cannabis industry. I'll start with a few words about the Department of Commerce before turning it over to Mr. Fish, who will provide a detailed response on these programs. Maryland Commerce is the state's leading economic development agency, and we work closely with elected officials and economic development agencies at the county and local level. Our goal is to attract new business and investment to the state, to retain business in Maryland, and keep them from leaving the state, and to support existing businesses as they expand and create new jobs. We have a wide range of programs that are targeted to meet different needs. We provide financing assistance and tax credits. We help provide site selection and location assistance. And we have teams of industry experts and regional experts that consult with businesses across the state to solve problems and connect them with resources. And we support workforce training. Our finance programs provide a wide range of targeted assistance to meet the varied needs of different businesses. This includes larger projects like corporate headquarters and distribution centers. And it also includes small businesses, including minority-owned, women-owned, and veteran-owned companies. The 5 programs we'll be focusing on today are the Cannabis Assistance Business Fund, the Child Care Capital Support Revolving Loan Fund, the Maryland Small Business Development Finance Authority, or commonly called Ms. BIDFA, and the Small Minority Women-Owned Business Account Video Lottery Terminal Fund, sometimes called our VOT program, and Advantage Maryland, also known as MEDAC. I'm now going to turn things over to Andy Fish, and afterward, he, Ms. Lahat, and myself will be happy to answer any questions you have.
And before Andy starts, Naomi, are you able to pull up our slides as well? Thank you.
All right.
So I think we're going to be on slide 5 now.
Thank you, Secretary Anderson, committee chairs, and members of the committee. So jumping right in, we're going to jump right in with the Cannabis Business Assistance Fund. This was a new program in fiscal 2024, an outgrowth of House Bill 556, Cannabis Reform. And in a nutshell, there are 3 capabilities here: grants and loans for small businesses entering the cannabis industry, grants to historically Black colleges and universities and other business development training organizations, and then grant and loan assistance for operating and capital expenses. If we turn to page 6, we're going to see how the rollout of these segments has been closely coordinated with MCA and also the Office of Social Equity in fulfilling the legislative intent of cannabis reform. Round 1, which was in the spring of this calendar year, was comprised of grants to help applicants converting medical license fees to the new required cannabis license. And that round has been completed with the results you'll see there. Round 2 has also been completed. That was to help the pre-operational businesses, that is those that had received for a approval for a conditional license back before the referendum was passed. And to date there, all those applications have been processed and approved. So round 2 is wrapped up as well. And that concluded in August of this calendar year. We're in the midst right now of kicking off round 3, which is social equity license assistance for close coordination with the lottery coming up for the social equity business license applicants. The applications for this round will open January 15th, and it's designed to dovetail with the lottery process that the OSC and MCA are conducting on about the 1st of January of 2024. And the commerce application period for the license application assistance will run for about 30 days and close on February 15th of 2024. There will be additional rounds after that for the Cannabis Business Assistance Fund, and we're in the process working closely with the MCA and OSC and the administration on designing those programs and knowing what exactly those will be, and the updates will be posted on the Commerce website there. If we could turn to the next page then, please. Thanks. We're at the Child Care Capital Support Revolving Loan Fund. This is in its 2nd year, and fiscal 2023 was the first year for it, and we've done some things to streamline the program. We're getting closer to the applicants to help them understand what's required before they enter the application portfolio, and that's with representatives of Commerce in conjunction with MSDE attending the industry association events that are key to these providers and helping them understand the application. In a nutshell, this program provides no interest loans for capital expenses for the providers to help them with upgrades to their facility. Could be new carpeting, paint, toys for children, desks, what have you. And it's very important that because it's very difficult for these businesses to get loans from a bank for a variety of reasons. A lot of them are home-based, or they're just viewed as a cottage industry by the commercial bankers. So this program received robust support last year, and the application period is open now. It's been open since October 15th, and it'll be open through December 15th for applications. And at that time, when the window for applications closes, we sit down and look at what's been applied and make sure we follow the priorities are laid out in the statute to make sure that we're going through those in the appropriate order that was the intent of the General Assembly in approving those applications and putting the money out the door. There's $10 million in this year's budget for the program, and that's a revolving loan fund, so we'll be able to use the incoming loan payments in the future to help future providers seeking assistance with that. So thank you for listening to information about the Child Care Support Fund. If we then turn to page 8, we'll see a little bit on the dispersion of where last year's loans were utilized or dispersed. You can see pretty good dispersion across the counties, and we're looking forward to hopefully having more counties participate. Again, it's based on where the centers are located, which is where this data comes from. But a total of just over $10 million dispersed with last year's program, assisting 64 child care centers in that regard. Shifting gears, then we'll move to page 9 and touch briefly on Ms. BIFA. I know you've got a presentation later this afternoon from Mr. Tucker from the Meridian Management Group, which is Commerce's partner and contractor managing the program. This is one of the oldest programs within Commerce, established in 1978, to promote the viability and expansion of businesses owned by those who have been historically and economically disadvantaged. It was later broadened to support all small businesses, and we'll show some charts about the uses later on that. And at the bottom here, you see some recent recipients. These are businesses that all received funding over the last 12 months from Ms. BIFA. One leg up is a Prince George's County-based business established by a young woman who since growing that out to being a really neat business that continues to grow. SoFine Foods is located in Montgomery County. And then Fearless is a technology company in Baltimore City, and you might recognize that name or logo from some recent media headlines, which have been favorably highlighting what's able to do and its growth there. In terms of our recent settled transactions on the next page for Ms. BIFA, we'll see kind of a 3-year history here, and this kind of treats 2021 as a restart year following the pandemic and coming out of that. And you'll see the number of transactions that were approved over each year. 2021 was abnormally high because of the CARES Act transactions and the pandemic that went on. And the 22 and 2023 numbers are a little more representative of what you expect to see going forward in terms of a normal run rate in that regard. We do report the jobs on this program, although it's not a job creation program itself. It's an important metric. Again, the program, and this is really to create access to those who historically are disadvantaged and unable to get that capital on reasonable terms and rates from the banking industry. Then moving to page 11, you'll see the usage of the program by county. And this has not changed much over time, but you'll see the last 3 years here. Baltimore City and Prince George's County have been the most active counties, but there's been activity in every area across the state here. Very positive in that regard. And I will note that the outreach by Commerce occurs in several areas. We work closely with small business contracting events that are coordinated by our cousin agencies over at Labor and DHCD and other industry associations to make sure that the availability of this program is out there and make it close to people to connect with in that regard. Page 12 then touches upon the demographic information I referenced earlier. And I'll mention first that Commerce cannot legally require a participant to answer this part of our questionnaire. We've had advice from the AG that can't be legally provided, but we do have a voluntary form. And fortunately here, you'll see the results of those who voluntarily provided information. And you'll see here, despite the widening of the program several years ago to be more inclusive in that regard, it's still widely used by those who we would deem historically underserved, looking at the demographics here among Black or African Americans and the female population here as well. I'll note here we do have some separate programs that are utilized by the veteran community, And that might explain why you don't see much usage here. And there's been growing usage among the Asian and Hispanic communities that we can see based on what applicants have chosen to disclose with this form in that regard. In terms of the outcomes on slide 21, then we'll see here on average there are about 132 businesses.
Sorry, Naomi, back to slide 13. Thank you.
13, yeah.
Thanks, Naomi. We're good. On average, there are about 132 businesses in the program each year, and the maximum exposures at state, runs at about $24–25 million. Presently, we've got 49 what we call troubled borrowers in the program, and that means those that have been slow to make their payments or have run into some kind of difficulty making the payments on time. And a lot of them continue to struggle since the pandemic, and it's just been a matter of survival for those businesses. We make every effort to work with them to help them get back on track. We'll do modifications to extend the terms, lower the payments, and connect with one other resources that might help them get the workers they need, or identify other roadblocks where we might be able to assist in that regard. So Commerce is very active, treating these customers with firm but appropriate care to really help them be successful, which is our goal for them in the program. And we thank our colleagues in Emerging Management Group to helping us in that regard as well. Then if we go to page 14, thanks, Naomi. A separate program, a little bit newer, coming out in about the 2017 time period, was a small minority and women-owned business account program, which I call VLT, so I don't stutter over it. It gets its funding from the VLT slot terminals around the state, and it's also designed for the small minority and women-owned businesses around the state. About half the allocations coming out of it need to be deployed in the areas immediately around the 6 casinos. And we do monitor where the funds are deployed to make sure we're at that guideline there. And then the other 15% are available to the businesses across the state. And we use a team of fund managers to oversee the distribution of the funds. And I would view that as kind of a franchise concept where Commerce operates the platform, providing assistance and reports for the fund managers, but they actually handle the applications, the servicing, and all the administration of the loans. And you'll see that come to life a little more here on page 50 then, as we move one slide over. We've got a RFP in the process right now to solicit 2 new fund managers to increase the distribution capacity. And you'll see here some statistics on the loans that have done through 2023. Very active, thanks to the great job that the fund managers do and getting the funds out in the street and helping the businesses that they're there to support there. And I would mention too that the fund managers being more local than a centralized commerce agency can be really helps a lot in regard because they know what the needs are of their communities and they can more closely match the needs because they're on the ground optically seeing things than perhaps we could do centrally. So it's been a very effective distribution channel in that regard. And again, lastly, to conclude this slide, again, it's not a job creation program, but we do track the jobs and track the capital that's invested through the program as we look at the other programs and just measure what we do at Commerce. So thanks for that, Naomi. And then we move over to page 16, and this is our fund manager team. Montgomery County in the bottom right has been the newest fund manager in the lineup there. Maryland Capital Enterprises in the middle, right, very active on the Eastern Shore. And I'd also note that a lot of the fund managers also have different area of industries expertise, and they very actively talk among each other if they run across a borrower that they think another fund manager might have some more insights on. So it's a real good collaborative network in that regard, working closely together there. You'll see the dispersion of the transactions over on page 17 as we move one over. And this has been pretty much across the board here. Also, in terms of the portfolio here, it's got just a 5% charge-off rate, which for loans that are a little bit higher risk than what a bank might do, is a very, very excellent rate for higher risk loans in that regard. And the department continues to work with the fund managers to help them design more flexible underwriting so we can help more applicants potentially qualify without making the fund managers uncomfortable, if you will, because they do set their own strategies and their own policies with the state support there. At this point in time, there are about 11 customers across this portfolio that are deemed trouble or seeking some kind of modification. And combined, those 11 represent about $950,000. So just to give some perspective on that. In the portfolio, about 26% are to non-minority owned businesses, 32% are with minority owned businesses, 34% to women owned, and about 5% are to veteran owned businesses, as those applicants have chosen to reveal in their voluntary disclosure to us. That rounds out our what we call our small business portfolio offering, if you will, and then moving over to slide 17 or 18 rather, I'm sorry. We get to what we call MPF, or the Maryland Economic Development Assistance and Authority Fund. This fund is really there to do two things. One, a big use is supporting the counties in the big project needs that they have going on in their jurisdictions. And with that, in concert comes along with the large projects that come along with very large, substantial private capital investment. We're talking in many cases hundreds of millions, if not billions of dollars, and also hundreds or thousands of jobs that accompany that kind of project there. It's important to note that the state enters the support for those businesses very closely in conjunction with the local jurisdiction. There's a resolution needed by each county council or board of commissioners evidencing their support for the project, as well as a resolution authorizing a 10% match to the state funds there. So that shows the alignment of the project among the state and our local partners there as well. You'll see the 5 capabilities listed on the slides there, and those capabilities have evolved over time. These capabilities are listed in the statute. They have not gone away, but you'll notice things like daycare. Daycare needs are currently met with our daycare capital support fund. And then one bullet above that, our regional or local revolving loan funds are really being met by MSBF and the VLT loan programs. So different programs evolved over time to step in and meet the needs and become a little more relevant here and there to best help the customers in that regard. And then on page that follows, page 19, you'll see our MPF settled transactions over the last 3 years. And it's important to note that these projects have a long time frame. It's not unusual for a project on this chart to run 18 or even 24 months from time of its inception to approval to when the documents are actually signed and then the money is out the door. They get closer to documentation once all the capital expending is done. So that means they've had to secure or procure all their steel, brick, et cetera, mortar to put inside the facility and hire the people. At that point in time is when the state funds are ready to be dispersed. We've got a team that tracks that very closely, and all the documentation is very closely coordinated with the Attorney General's office to protect the state in that regards. There are usually about 38 opportunities in the pipeline at any one time in terms of really discussion, mid-stage versus getting ready to settle, to give you some context around that. And again, we are very careful to make sure that we don't overextend the available funds that are in this program so that these companies relying on can know that funds will be there when it comes time to complete their application and complete that. We provide information on all these funds in the Jobs Development Act report and other program reports that we're happy to make more convenient or provide to the committee, as well as answer any questions here. Lastly, you'll see some data on the economic impact arising out of MPF on page 20. I'm sorry, this shows our geographic dispersion by county, and this is not too surprising. It really dovetails where the larger centers of populations are. When you look at the counties, then also consider our different assets being, you might think about the big federal assets in Montgomery County and the related biotech industry going on there. It's also been growing in Frederick County. You'll think about Trade Point Atlantic in Baltimore County, and then the other assets near the airport, in Anne Arundel, and other assets across the different counties there, as well as our distribution system. For example, 81 and 70 intersecting in Washington County, and what that proximity means to businesses, as well as the I-95 corridor. And then Naomi, if we could, that'll take us to slide 21. Thanks. These are a lot of numbers here, but we closely track, what the economic impact is to the state, recognizing that these are, large investments in these programs. Really looking at the bottom bullet point, we use a metric that's widely utilized in economic development circles across the United States. It's called return on incentive. So not return on investment, that would be the businesses putting its money in, but in terms of the state's money going here, the return on the state incentive is over $15 for every $1 of state going into the program. So is very favorable in that regard, and that's for the whole portfolio across the board. And we also measure the jobs it created out of this program, as well as the total amount of private capital that's invested here. And with that, Mr. Secretary and committee, there's some recent MEDAF recipients on the very last page here. Con Air was just announced in the last several weeks, a big distribution center in Washington County. Con Air is more than just the hair dryers you might see in your homes, but also home appliances and other products utilized in their portfolio. Lidl or Little being the grocery company, but they've got a big distribution center in Cecil County. We assisted. Home Chef is a more recent recipient in Baltimore City. And Vegetable and Butcher is a very exciting story in Prince George's County, where it's a manufacturing company that has established its manufacturing headquarters and distribution primary facility in Prince George's County. And that's going forward as we speak. So that wraps up all of our remarks here on these programs. And I thank everybody for the time. And Secretary Anderson mentioned that we'd be glad to address any questions.
Yeah. And thank you to the committee before, if I may, Madam Chair, just to cite that these are the tools that we use to energize and support our economy and our business infrastructure across the state. We are leaders in several places, innovators and others. And just wanted to put that out there about our place as a state and how we're operating and being competitive.
Yeah, thank you, Secretary Anderson and team, for that briefing. Appreciate it. Just going through all the different programs, it seemed like we are doing a lot of loans. I'd love for you to reach back to us and break out, especially with the Cannabis Assistance Fund, with the breakout with loans and grants, as far as what percentage of those monies going out are loans and versus grants. And also, in looking at the chart, one of the large charts you gave, it had like $305 million in monies flowing through different agencies over the last 24 years, since 2000. And so I did a little calculation here. That's under $13 million a year going out in loan/grants. So fast forward to the Biden administration with all the Build in America programs, the CHIPS Act, Inflation Reduction Act, all these federal incentives offered, which are very lucrative, most lucrative ever, to bring manufacturing back in the United States. Last year alone, almost $300 billion in foreign direct investments came into the United States. $300 billion, 1 year alone. And from speaking to Secretary Anderson, we talked about this, Mr. Secretary, at MACO briefly. And, so I'm concerned about that what is Maryland doing to have these high impact manufacturing facilities come to the state? And also, I wonder sometimes if and I know I'm not blaming the Commerce, because the General Assembly give you your marching orders and legislation, what you can and cannot do. But as a team, I want to know how we can fix that and how we could bring some of these high impact manufacturing, tremendous jobs to Maryland, all over Maryland. You're talking about from Allegheny, Garrett County, all the way Southern Maryland, Charles County, and basically have these charts where projects are kind of like even as far as percentage of jobs being created in these regions. Because when you have $300 billion coming in to the U.S., alone in foreign investment, not American companies invested in these projects. And you have our neighbor in West Virginia last year put in a $300 million grant program, incentives. You know, what can we do in Maryland to think bigger and to bring some of these big jobs in? And so if you could weigh in on that, Mr. Secretary, and let us know your thoughts.
Sure. I'll jump in, and I'll let Andy and maybe Jen give you comments. I know you had a couple questions about the numbers, but in general about our foreign direct investment opportunities, that's definitely a really big opportunity where we're going to be participating more. And for lack of a better term, it's about, again, what the governor always talks about, being more competitive and make sure we work really, really hard in the marketing space. We're real fortunate. I'm not sure if you all are familiar in the foreign direct investment space. There's a national conference every year put on by the U.S. Department of Commerce called Select USA. It's almost a beauty pageant of the states. Here, 39 governors come, and all of the foreign nationals, foreign companies come because they still understand and know that the United States economy is still one of the most effective and robust in wanting to invest. One thing that I noticed, there were only 3 counties present at this point, and it was Montgomery County, Charles County, and Prince George's County. We have 23 counties in Baltimore City in our state. One of the questions that we talked about was making sure that we're able to market and take advantage of it. We work really, really hard with the programs that we have. We have several new programs, one called the Global Gateway Program, where we effectively offer a soft landing for foreign companies to make sure that they invest and can sort of test drive the state of Maryland. We also have great conversations with some of the multinational and global pension funds about making infrastructure investments in the state of Maryland. You know, to make a story pretty short, we just have to make sure we're really, really active and really, really coordinated. One of the things that we have to reconcile across the state, again, across all 23 counties of Baltimore City and contiguous land use opportunities, is to make sure that we're all on the same page when we can amass land. Again, we work very, very closely with our local jurisdictions, and sometimes we have to make sure that things are pretty, you know, balanced and coordinated. Again, you know, with manufacturing opportunities and investments and how we attract those. We'll be more than happy to walk through, and we work, you know, very closely with everyone. So that's just a quick response about your initial idea about foreign direct investment and how we're able to attract and work very closely with all of the federal government opportunities. And again, one of the things that we're working on, and we work on it every day, and I think everyone may have heard, but we just received a big major tech hub announcement. And it was the first time, I think in a very long time, that the state of Maryland had put forward what was a coordinated effort on behalf of the state to receive one of the Tech Hub grants. Since I've occupied the job, I've consistently heard stories about some of the many, even internally competing entities that we have within the state in different portions that may have submitted applications or submitted grants from different portions, whether it be Southern Maryland, whether it be Montgomery County or the Baltimore region or different places. But we were able to get our arms around in a coordinated effort and represent Maryland in the federal space. And we won. We were one of 31 cities out of 400, I think it was 300 applications for what is a very promising, you know, federal opportunity to continue to get an allotment. But not only that, to make sure we put our best foot forward to continue to work. The Tech Hub opportunity is not a one-off opportunity. We still have to compete. We still have to build our program, and we still have to make sure we prove that we're growing an economy and still worthy of the federal relationship and the investment. So I don't want to go on too far, but those are just some of the responses, Chair Ellis, about you know, how we're working in our plans to really take advantage of the federal opportunities.
Yeah, and really appreciate that answer and the discussion we've had continually. And I'd love for you to kind of have a outreach to all our jurisdictions about that conference, because the last conference was in National Harbor in Maryland.
It's every year. It's in the state of Maryland at National Harbor, Prince George's County. All of the foreign national companies are there. All of the states are there. Every year. Yes, they're all here in our state.
in our state. So I hope you can reach out to all the jurisdictions, let them know about this opportunity for tremendous economic development that's happening right here in Maryland. So thank you so much. Co-chair, would you want to any questions or any other thoughts? Okay. Well,
Mr. Chair,
Chair Bidle.
thank you. Thank you. I didn't think you saw my hand.
No, I didn't. So thank you for.
Thank you. And Mr. Secretary, thank you and your team for the work that you're doing. You got my attention on the Child Care Support Fund, and I wonder if you could send me more information about how operators or potential operators can reach out about accessing that fund. You know, I represent the area that includes Fort Meade and the National Business Park, NSA, and we have a huge shortage of child care providers. And I think that fund could help some of my potential providers.
Yes, ma'am, we sure will. And it is our Office of Federal and Military Affairs, along with the Office of Veterans Affairs, are working very closely with it just the same, and we'll be sure to get you that information. Yeah, we can widely distribute it.
Okay. Well, thank you for any more questions. Chair Watson, do you want to lead out with the other participants? And so thank you, Secretary Anderson and the team for being here, and please follow up with us with items you requested. And if you could also share your presentation with us, your slides.
Absolutely. I think Naomi has it, right? Yeah, Naomi has it. Yeah.
Thank you so much.
Okay, thank you, Mr. Chair. As we move on now, we are going to the activities of the Meridian Management Group, and we should have Stanley Tucker, Chief Executive Officer and Co-founder, here with us today. And Mr. Tucker, you're muted, just in case you don't know that.
You're still muted.
Okay.
There you go. There you go.
Okay. All right. Thank you very much. I think there's a presentation that we shared with you. Can you bring that up, please? Okay, next slide, please. This presentation is focusing on the Meridian Management Group, the funds that we manage, the Maryland Small Business Development Financing Authority, and the Maryland Casino Business Investment Fund. This is our mantra here, that capitalism, basically would be without adequate capital, does not work. And according to numerous studies, the lack of access to capital is common among communities throughout the country, particularly in the minority and women-owned business community. Our approach to this problem has been the development of a unique strategy with what we call a continuum of financing products for small, minority, and women-owned business that includes debt, equity capital, along with surety bonding to assist with these companies. So what we do, we not only provide capital, but we develop entrepreneurs. Next slide, please. This is the content. We'll give you some information on our various components, our program components, our ethnicity and gender, and our geographical distribution. This is for the Maryland Small Business Development Financing Authority, as well as the Maryland Casino Business Investment Fund. Next slide, please. Here's just an executive summary. The Maryland Development Financing Authority came about some legislation creating back in 1978. Its primary purpose is to operating capital to businesses in Maryland that are unable to obtain bank financing and surety bonding in commercial market on reasonable terms. The majority of the financing has been provided to minority and women-owned businesses. The agency has 4 complementary components. Next slide, please. These are our components, and these components may be used concurrently. Actually, this strategy that we've put together over a number of years has been designated as a national model. So we have what we call contract financing, where we provide loans and guarantees to perform on government and now public utility contracts. We can provide up to $2 million. There's a guarantee fund where we can provide guarantees to banks for up to 80% of a loan, up to $2 million. We have a surety bonding component that provide bid payments and performance bonds, specifically dealing with commercial sureties to perform contracts with government agencies, regulated utilities, or private entities up to $2.5 million. And the final component, which is called the Equity Participation Investment Program, provides debt and equity investments, including early stage companies up to $2 million. Next slide, please. Ethnicity. About 105 of the number of our financing, or 70%, were provided to minority businesses, while 44% provided to financing, or 30% were provided to businesses owned by non-minorities. So we have a pretty diversified portfolio. Gender, 80% of the number of financing were provided to male and businesses. 60% of these businesses financing, or 42%, were provided to women-owned businesses. The geographical focus, we go into more detail, and I'll wait for the next slide till we get more specific in the geographical focus. Here we are, our necessity. Over this July 21 to June 2023, you can see the percentage there. 66 African Americans, or 44%, Asian 33 at 22%, Hispanic 6 at 4%, and white at 44 at 30%. Totaling 149, that's the 100%. Gender, 86% male, and 63 or 40, 58% or 42% female. Next slide. This is more of a pie chart, if you will, of the various components which we talked about earlier. Next chart, please. Our accomplishments. We are recognized as a national model. Our team has been responsible for developing it into a recognized national model. We are acknowledged by Wall Street Journal, the Insight Center for Community Economic Development, and the Center for Regional and Economic Competitors. A lot of other states have approached us about, our strategy over the years, what it took for us to get these various components, and we just shared with them that we have a very cooperative legislature, that we showed the results as well. We are considered the most active non-bank lender to minority business in the state, according to a Johns Hopkins study. Our financing diversity, 70% of the number of financing to minority business and 41% number of financing to women-owned businesses. These are some of the recent recipients: CPB1 LLC, doing business as Chaps Pit Beef, Glen Burnie; Fearless DSI LLC, and this is the difference here. Harry has a barbecue businesses. Here, Fearless, we did an equity investment in there, and their technology business actually doing around $100 million a year now, and really moving on to for additional fund. I think we just financed about another $2.5 million, $3 million with a number of a consortium of other private investors. That's the other thing we do as well. We bring other private investors to the table to help our portfolio companies. Sweeten 10, doing business as Sweeten, is another company that we brought Goldman Sachs to the table because they saw the value of this particular company. Goldman Sachs approached us really to invest in it. And so we said, yes, sure, we want Goldman Sachs to invest with us in this company. And we have Calmy Electric Company. Actually, I was on a call with him this morning. He's growing substantially. Interesting conversation we had with Calmy is that he wants to grow his businesses as business, and we have our guarantee component. But this is a very, very important point I want to share with the legislators. Our guarantee component is restrictive. It's good, but it really needs more modifications to make it more flexible so we could utilize the this component with more banks. We have gotten some activity with the banks, but we could really get more activity with the banks if we look at modifying it so that it works better for the banks. Right now, it's tough for the banks to participate, we understand. So we want to come back to the legislature, introduce some legislation to make it more feasible for the banks to participate with us. Next slide. These are some of the accountings. You can see how it breaks down, if you will. We would like to really spread it out more. One of the challenges that we have almost no money for marketing, and we want to talk with the secretary about that. But right now, we don't have a marketing budget, and that's unfortunately because we're dealing with small minority and women-owned businesses, so we need to get the word out more to let them know the kind of financing products that we have. Next slide. This is just a pie chart. What we just shared with you. So let's go. It's broken down specifically in the other. So next slide. This is what the activity has looked like in 21, 22, and 23. You can see the number in 20 and 21. That was a result of funds we received during the pandemic, if you will, where we were able to get some additional funds to really maximize. There was a combination of loans and grants as well. Next slide. The Maryland Casino Business Investment Fund. This is another fund that we have. We introduced legislation working very closely with the Maryland Legislative Black Caucus when gaming was coming into the state of Maryland. We worked with the Black Caucus. Legislation was introduced where 1.5% of all slot proceeds generated by gaming venues to be used to fund small minority and women-owned business. This strategy is being administered by the Maryland Department of Commerce, and MMG is one of the 8 fund managers, has been awarded $18.7 million through 2023. The important piece to note here that the state of Maryland, along with a Meridian Management Group, received a national model for this strategy. To date, Maryland is the only state, last time we checked, has this strategy to finance small minority and women-owned businesses. And this is why they gave us an award, recognized us as a national model for utilizing this strategy. Again, no other state in the country has this strategy in developing financing for small minority and women-owned businesses. Next strategy. Next slide. Has any information on MPF? This is the ethnicity. 58% of the number of financing, or 85%, were provided to minority business, while 10 of the number of financing, 50% provided to non-minority business. Gender, 34 of the number of financing, or 50%, were provided to male-owned businesses, while 30% or 34 or 50 were provided to women-owned businesses. This is our geographical expansion across the country. Prince George's County, you see, was there at 27%. Baltimore City was about 13%. Howard County was about 5%, 10% Anne Arundel County, 18% Baltimore County, 8% in Montgomery County, 12% Frederick County, and 7% in other counties. Next slide, please. Again, this is the geographical distribution for Ms. Bitford. Then again, we are talking with the secretary about getting some money for marketing so we could market our various components across the state of Maryland. Next slide, please. This is a MPF ethnic breakdown. You can see 47, 69%, African American, Asian at 15%, Hispanic at 1%. That's a area, a community we really want to get more activity from the Hispanic community. The white community is 15% at 10. And male, 29%. 45%, and female at 55%. Next slide. These are the transactions for 21, 22, 23. You can see what that looks like. 39 and 21, 22, 13, 23, 32. See the amount of dollars here. Again, marketing plays a critical role here. Next slide. Oh. That's the final presentation. I'll be happy to answer any questions.
Thank you, Mr. Tucker. Do we have any questions?
Yeah, sure, Madam Chair. Real quick question.
Sure.
Thank you for the presentation, Mr. Tucker. And so you want to get marketing funds. Is that because you have potential funding that's not being accessed right now? Is that why you want to kind of up the marketing?
Well, yes and no. What we have, we would have a lot more activity, which means that really we would need a lot more funding. As a matter of fact, we just met with the secretary and we don't have funding going out to the remainder of the fiscal year. However, we do have a number of applications for us. So that's a problem for us. The same thing happened to us last year. We got to the end of the fiscal year, we didn't have enough money to get through the fiscal year. Okay, and here we have a governor just signed an executive order to maximize minority and women-owned participation, given all of the infrastructure dollars coming into the state, et cetera. Yet the organization that really provide a lot of the working capital, the equity financing, the surety bonding, we don't have any money. Okay, so that's unacceptable.
Great, thank you. So I mean, you're like a revolving fund, right? Because you put the loans out and the companies.
Yes.
And then each year you get additional funds from that. Was that 2% from the VLTs or your share? Do you get additional funds each year? New funds in addition to the revolving funds?
Well, we get the revolving funds, but Senator said we get the revolving fund, but they go right out, and then we need additional funds, okay, from the legislature, to increase that pot.
Oh, I'm referring. Thank you for that. I'm referring to funds from the VLTs, the video lottery machines, the casinos.
Yes.
Each year you get additional new funds coming into.
Yes, but it's not only us. We only get a small portion.
Okay, what percent?
There are, let me see, there are about 8 other fund managers that get a part of those funds. We're just one fund manager, even though we really did all the working with the legislature and getting that legislation passed. Okay, but we aren't the only ones that manage those funds. There are actually 8 other fund managers.
Right. So how much do you get per year on average, say last year, 2022, in new funds from the VLTs?
Alex,
last year was, it's Alex. Last year we received $2 million in 23.
Okay.
So it's it's not a lot of money, Senator.
Okay, great. Well, yeah, thank you for those numbers.
Sure.
Thank you, Madam Chair, for
You're You're welcome. Just to clarify with you, Mr. Tucker, do you get the full 1.5% that comes from the VLT?
No, we don't.
Okay,
No,
so
we don't.
when you were saying you were splitting it between 8 fund managers.
Yes, there are 8 other fund managers, so it's not a ton of money. Okay. And so, our mantra is, capitalism without adequate capital does not work. If we had additional capital, okay, we can help a lot of other companies. Now, in terms of, I think there's one very important. Without any other, that was the last slide.
Yeah, that was the last one.
Let me share with you a very important point. Several years ago, this is my final point. Several years ago, we engaged an economist, Dr. Arani, over at Towson University, to look at 20 years of our data, to really conduct an economic impact analysis that our loans investments has had on the Maryland economy. Long story short, his data, it came back and said that for every dollar received from the state, the state gets $9.30 return on the investment. This is an independent economic analysis, economic impact analysis by the economist, Dr. Arani, over at Towson, and showed that kind of return that we are bringing back to the state based on our loans and investments. Okay? So for every dollar we put out there, we are bringing $9.3 back in taxes into the Maryland economy, which I think is pretty good. Okay? So it shows that if in fact we can obtain additional capital, we could have even more of an economic impact analysis and employing folks, etc. This economic impact analysis, we are told, we haven't seen it around. It says one of the highest in the nation for an organization that has the budget or the access to the capital that we have.
All right. Chair Ellis, did you have any follow-up, or are you ready to move to the next agenda item?
Yeah, no follow-up. Thanks, Ms. Tucker. Appreciate you, and thank you, Madam Chair.
Thank you very much for having us.
Yes, Mr. Tucker, thank you for being with us today. And now we're going to move on to the activities of the Maryland Technology Development Corporation, or TEDCO. And we have Troy LaMail-Staval, Chief Executive Officer. Go ahead.
Can y'all hear me? Good afternoon.
Good afternoon.
Good afternoon. Good afternoon. Thank you, Chair Ellis, Chair Watson, for having all the members of the committee for having us today. I'll be the primary speaking today. I think I have a few colleagues. I think Mindy and Alex are online and a few others are watching. I think as you guys have gone through a number of presentations, so all of my good friends from Commerce and the Treasury and Stan Tucker. So I will try to be a little different. I won't walk you through the slides one by one. We'll try to highlight some things I think you want to hear about, the great progress we're making at TEDCO. But always I'll take any questions you have. So Naomi, if you could bring up the slides, I will try to be expeditious with this. So I know we have a lot of new folks, and I think many of you probably know about TEDCO, but I think it's important just to give you kind of an overview of who and what we are. So if you could go to the next slide. So, one of the things I think is important on this particular page is this word empowerment of folks, because that's what we're about. We're about how do we help identify, invest, and help grow. And a lot of what we do, you've heard a lot of the great programs that other entities have, like Commerce and Mr. Tucker at MMG. As you know, we are focused strictly on investing. We do all the early stage life science investments for the state. We have other programs, which I will speak about, that invest in and do great work in our tech transfer and also in our stem cell area. But a lot of what we do is around how do we, the heart of what we all do is how do we help bring innovation and entrepreneurship into the marketplace. You can go forward, please. This just gives you a quick overview of the organizational structure at TEDCO. We're 40 strong. I'm a numbers guy. And so you're going to hear me talk about in a few minutes that we've got about $2.5 billion of economic impact. We did a similar study that Stan talked about a few years ago. We're updating that study because we know that was a 2021 study. We know that $2.5 billion, we've been around for 25 years, is understated. There's parts of it that we didn't really, so we know we have at least almost a $3 billion, if not more, impact. You'll hear me talk more about that, but the reason I want to bring it up with this slide, if you just do the math, we have about, again, 40 folks here. If you look over the 25 years of TEDCO, we've had about 180 employees. So if you just do the math, that's about $14 million of impact per all the employees who have been at TEDCO. And probably not a good joke with you guys, but I'll say it anyway. We don't pay anybody anywhere near $14 million. And so we've had a tremendous amount of productivity per employee. If you take that same $2.5 billion over the 25 years we've been around, that's over $100 million of impact. And we just finished up a study that I'll be sending to your other colleagues. That number compares very favorably to what other states that have very similar TEDCO-like entities are doing. And so we're very excited about what we're doing, and you'll see a combination of both what we're doing, what we have just started, and what we plan on doing. You can go forward, please. I think one of the most important things of any organization, all the organizations I've ever been about, is having values and having very clear values, and not just having them on a piece of paper, but having them a fundamental part of what we do and how we do what we do. And so here you have our 5 core values. And the one we're exhibiting today, obviously, is both accountability and stewardship, but all of them come into play. And what's great for me in my 3 years now here at TEDCO is, as we call our One TEDCO colleagues, when they talk to each other, they actually reference these. They talk about these and they use them and how we talk about one another, how we talk about to each other, to the ecosystem. And so these aren't just words, ladies and gentlemen. These are actual how we actually live and breathe what we do at TEDCO. You can go forward. And it's a slide. You can just keep going to the next one. This is the one I was talking about. We're at this again is a 2.3 billion. We're reworking this because we know it's understated. We know we've been able to do a significant amount of economic follow-on to the state. This has been a great program for the state over the years in terms of the benefit. And again, we do direct investments. The way we, quote, make money, we do an investment at an early stage, say for $1, and the goal is to get a multiple on that dollar, just like any other venture capital firm. We've been extremely successful with that. One of the metrics that we use that's used in the venture capital business is a metric called total value paid in capital, TVPI. It's a measure of how much money you got back. A really great firm operates at about 1.5 to 1.6. TEDCO operates at 1.4. And so the reason that's an important metric, because we have the constraints that you have put on us, which are fine, that we only invest in the state of Maryland and we only invest in certain types of companies. Most venture firms don't have those types of constraints. And yet, even with those constraints, we're still able to perform at some of the highest levels of other venture capital firms, but we have significantly more risk. So on a risk-adjusted basis, which is another metric, we actually have significant returns given the risk that we have to take on because we are limited to the state and to the stage in which we invest in. You can go forward, please. You can skip this slide. You can keep going. Because I really want to spend a minute on this slide. This slide, if you don't know anything about TEDCO, this is the slide I would have you spend time on. And I'm going to spend some time on this slide because this really walks you through the states on the X. I'm an old engineer, computer scientist. Along the X-axis, you have the stages that we look at, how we view stages. So along the Y-axis, you have the programs as they move up and then as you go across that X-axis, you move from what we do with our friends at the university and the federal labs into the corporate space. So if you start to under the where it says grants, translational research, I've already mentioned our Maryland Innovation Initiative. That's our effort that we have with the 5 research institutions that we have here in the state of Maryland. That's Johns Hopkins, that's University of Maryland College Park, University of Maryland Baltimore, University of Maryland Baltimore County, and Morgan State University are the 5 research institutions. And we help facilitate that tech transfer. And they have done just tremendous. This is a nationally recognized program led by Dr. Santhamam, and they've done over $200 million of awards. All this is in your document. I'm not going to go to the pages that are coming behind this, but all this is in a document that Naomi has, and I hope and she'll get to you if you don't already have it. They've done 600 grants with 50 organizations. And so, I'm sorry, this is the stem cell. I'll give you stem cell numbers. With MII, they've done about $52 million of investments, 740 of follow-on investments, 176 companies have been created, and they had 8 exits. And so again, this is where we're taking the great research happening in our federal, in our universities and moving it forward. But we also recognize that not all innovation is just being done at those 5 institutions. Through your support and the governor's support, we have monies that Dr. Santham is using with Frostburg and with Bowie State to think about what parts of the MII model can we take to the comprehensive universities, focus on innovation, entrepreneurship. How do we figure out how to tap into the great thinking that's happening at the Frostburgs, at the Bowies, at the Coppins, at the Towsonds? How do we tap into that? How do we organize that in a way similar to what we've done with our research institute? So stand by for that, and that's going to be coming. I kind of prelude the stem cell. The stem cell's done some great work as well. It's like it says, they've been around, and so because of the additional funding that you were able to provide, they're now a $20 million fund. And over the years, they've awarded over $200 million of awards, 600 grants, as I mentioned. Again, was giving you the wrong numbers. And they do a lot of great work. The great story I love to tell with stem cell, at our last budget hearing last year, there was a little boy that was there in a little tie. He was about 6 or 7 years old. That little young man was born with the bubble disease. He had to live in a bubble. But because of the great work and the investment that stem cell did, particularly with Johns Hopkins, he was no longer in that bubble, and he was running around bringing tears to everyone's eyes with his little bow tie on. So these are two efforts that we have right now that work with our university and our research communities. But also we have an effort that works with our federal, as many of you know, we have more federal labs than any other state in the union. And so we have a number of efforts that really focus on how do we tap into that. And I will tell you, just be in full transparency, we haven't begun to really tap into the opportunities that exist at our federal labs. We have to do more, and we can do more, and we will do more. We have efforts around bringing that information, bringing that intellectual property or IP from behind the gate. One of the big efforts that, again, kind of a great effort that we do within TEDCO, we call it One TEDCO. Our Maryland Innovation Initiative last year signed an agreement with the Henry Jackson Foundation. Many of you may not even know about it. I didn't even know about it. But the Henry Jackson Foundation gets $500 million a year from the federal government. They focus on military health sciences, warrior sciences. They've got a ton of IP that they don't know how to bring to market. And so they've asked us through our MI efforts and our federal programs effort to begin to bring that. How do we move that across that dashed line you see here from the federal labs into the corporate space? So as you continue to move to the right, you get into our RBI and UBI. That's RBI is an effort that we have. We divided the state into regions, rural regions, 4 regions, and we have individuals in each of those because we realize the ecosystem in Western Maryland is different than it is in on the Eastern Shore. But we also recognize that the ecosystem in Baltimore City is different than it is in Prince George's County. So we have individuals in those 2 municipalities. That's the Urban Business Innovation Initiative. And it's about bringing those ecosystems together in a way so the entrepreneurs have access to all the talents and all the resources we have. We have a ton of resources in the state of Maryland through our friends at Commerce and people like Stan and others. But the challenge is the entrepreneur has to go find those. And what's the one thing that most entrepreneurs do not have? It's time. And so we've got to do a far better job of bringing those resources in a manner, in a way that allows them to not have to spend the time and to search those out. And we're working with Commerce and Stan and a number of folks to do that in a far better and a far more efficient way. But what TEDCO also does, in addition to bringing all those resources together, we also help fund many of these early stage companies in these rural areas. And so we have this $25,000 fund that we put $25,000 in called the Rural Pre-Seed Fund. Sorry?
Hold on.
Whoever's got their mic on might want to just mute it, please. And could I ask the presenter, we're running a little bit late. Do you think you can
Yep.
up and ask questions by about 2:45?
I will be in before that.
Okay, thank you so much.
I will do before that, but thank you for that time check. I appreciate that. So I actually want to very quickly. So we have funds. I'll summarize this. We have these three funds, the four funds you have: a pre-seed fund, the social impact fund, the seed fund, and the venture fund. We're investing folks anywhere from about $25,000 to $30,000 all the way up to $2.5 million. I wanted to state some stats I just got today about what's happening in this space, and Stan alluded to them as well. I want to read from TechCrunch, which is a publication that's used. I'm just going to quote him. This is from Crunchbase from TechCrunch. Black founders raise 0.13%. I want to be clear on here. Black founders raise 0.13% of all capital allocated to U.S. startups in Q3 of this year. This is a substantial drop from the 1.2% of the venture dollars raised in Q3 of 2022. 0.13 went to Black founders across the United States. Here in Maryland, through your entity called TEDCO, I'm very happy to announce in fiscal 23, we had across these three funds, the Social Impact Fund, the Seed Fund, and the Venture Fund, we awarded about 61, we approved 61 companies. 45 of those were, we use the word SETI, it's a federal term, socially economic disadvantage. So that's 73%. In the 3 years that I have been here, we've done almost $100 million of over $100 million of deals, well over a couple of hundred deals. More than 50% of those deals have gone to someone of color or woman, and almost 60%. And so I want to give you another number here. Again, I told you I was about numbers. We get about 300 applications across all three of those funds. And 178 of those are from, again, these SETI backgrounds. So we get about 60% of applications from SETI, but 73% of the awards. So we're over-indexing from the awards point of view. So we are doing our part to try to move that 0.13%. So I'll stop there. I mean, what I'll do now is, if you could, Naomi, just kind of barrel through. I'll tell you when to stop. Just kind of barrel through these slides. These are all the support slides and everything I just been referencing. I want to quickly go to keep going. Stop right there. Go back. Bingo. This is where I'll close at, Madam Chair. Through your support, we have a number of new efforts I want to spend just a very quick minute on. This is the Makerspace Initiative. We have makerspaces across the state. You've given us the ability to go and do makerspaces. You see the numbers here, the number of received the application number of awards. Many of these are in those communities I just referenced, both rural and urban communities that don't have these makerspaces available to them. So this is one, we thank you for your support of this, and this will continue, if I remember correct, for the next 3 to 4 years. Go on, Naomi. Another one, this is a very important one. We had, through some other previous efforts prior to me coming in, we had some efforts that we were trying to work with the pension fund in terms of investing some funds out of pension. Some of that didn't quite work out as well. I think we just didn't structure that properly. But through some efforts of now Comptroller Learman and others, we were able to get the Maryland Equity Investment Fund. This will very much complement what we currently do across those other three funds that you heard me talk about. So this just gives us more, again, my terminology, more dry powder to continue to do the investment modality that you've asked us to do. You keep on going. I want to spend a hot second on this one. So prior to me coming here, Myron Norton, who's the board chair, was the board chair that hired me. Sorry about my phone ringing. Came on and said, we really got to help women understand how to be better at being entrepreneurs. And so we developed this. We developed through Linda Singh, who I'm sure many of you know, developed a program focused on the Leading Women's Program that we did a pilot in Montgomery County on, that we just graduated. But we also recognize that Black women have some different challenges. And so we worked with the 4 HBCUs, Bowie, Coppin, UMS, and Morgan, to develop the Open Institute for Black Women Entrepreneur Excellence. We have been able to get support from Wells Fargo, T. Rowe Price, and our senators have been able to provide us almost $500,000 in earmarks of grant. We expect a few more entities to come along and support this. We're really excited about this. We have a cohort that we hopefully will be launching in the spring. We're about 25 women. And let me announce that on the November the 15th, we're having a seminar at Coppin State talking about the issues that Black women founders have in securing capital. We have more than 200 folks who are going to be attending that. If you want any information, please let me know. I'll send it to Naomi. You can and welcome you to be there. I think we're going to have the speakers going to be there, and I think Delegate Atterbury plans on being at that session on November the 15th at Coppin. You keep on going so I can meet the time thing. This is the last one. Cultivate Maryland. To Cultivate Maryland, you get viewer support. We've been able to get the $3 million for fiscal 24, $5 million per year. This is really going to help accelerate. And I can't tell you, if you remember, we asked for $250 million. We know that was a huge number, but if you look at the work that other states are doing, those are the types of numbers that these other states are focused on to think differently about the workforce and the infrastructure needs that we've got to have. And it's not just about the money from the state. We've committed, TEDCO's committed, we've got to go out and raise private sector dollars. And I've talked to the Secretary Anderson about this. We can't depend on the state to do this, but we need the state support, but we need the state to help us accelerate this, and so we can scale this. So for our private sector friends. And then finally, you can go to the last slide. Cyber Maryland was another effort that you asked us to focus on. We know we've got to think differently about the workforce of cyber. And by the way, this isn't just about, when people hear cyber, they think it's strictly about, NSA, those types of jobs. We believe it's not just those types of jobs. It's also jobs for the industry. It's jobs for the Main Street. You got to make sure that dry cleaner, that baker on Main Street has great access to cyber talent. But it's also back to TEDCO. How do we ensure that we get a lot of companies that come to us that are starting cyber-related companies? They need access to great talent. And so we need to think about how do we increase the velocity and the volume of that, as well as the diversity of that to the workforce. And that's what this bill has done. And so we thank you for your support of that. And I think I'm going to hit the mark, Madam Chair.
Excellent job there. Do we have any questions for TEDCO? That was a great comprehensive presentation. We appreciate all the work that you're doing and the results that you're getting. I don't see anyone's hands raised.
I like that. It tells me that I didn't know what I was talking about. They said it clearly.
So with that, we will move on to the update on the activities of the Maryland Agricultural and Resource-Based Industry Development Corporation with Stephen McHenry, the Executive Director.
Thank you very much, Madam Chair and Mr. Chair. It's great to be with you today. I'm going to move very rapidly because I know you're under a real-time constraint. So if Naomi, if you'll call up the presentation, I will go through it very, very quickly. Next slide, please. Since many of the members of this committee are new this year, I thought I would talk just a little bit about the importance of agriculture in Maryland before I talk about Marbitco specifically. So next slide, please. Agriculture and resource-based business remains a very important part of Maryland's economy. And it might be interesting for you all to know that today, more than half of the state's land area is still privately owned rural working farm and forest land. So all those food products, many of them that go to Maryland consumers, come from our rural areas, but many of those products are processed additionally in our suburban and urban areas. So you'll see a slide later where you see the economic impact of ag and resource-based business across the state. Obviously, agriculture is very important in Western Maryland on the Eastern Shore. Next slide, please. We have a diverse agriculture in Maryland. Here's a slide from the 2017 census of ag that USDA does every 5 years. We have a diverse agriculture, all kinds of products being produced, but our poultry industry is almost half of the state's agricultural output, and it supports our corn and soybean farmers substantially. Our corn farmers actually get a premium because of the chicken industry here in Maryland. So it's a very important part of our economy, but we have many other producers out there producing other kinds of livestock, wheat, vegetable and table crops, orchards, fruit, that sort of thing. And of course, the nursery greenhouse industry is also quite significant in Maryland. Next slide, please. We have about 12,500 farms in the state today. The average farm size is 160 acres. In terms of the principal farm operators, 70% are men, 30% are women. The number of women operators has grown substantially over the last 2 decades. And Marbitka, I think, is having a clear impact in that regard. The other thing you'll note towards the bottom of this slide, the average age of the Maryland farmer is 57 years old. So we have an aging workforce, and this is true nationally. And also the average age of the beginning farmer is 45 years old. That statistic surprised me, but a beginning farmer is defined as a farmer with 10 or fewer years of farm management experience. So the definition might be slightly misleading related to that statistic. Next slide, please. Just a quick snapshot of our ag land itself in terms of what's picked up in the Census of Agriculture. 2 million acres. Most of that is crop and forage land. About 15% is woodland. The average farm in Maryland, though, over 55% of the farm acres are on farms of 50 acres or less in size. And we have larger farms on the Eastern Shore, but we tend to have smaller farms in Southern Maryland and Central Maryland area. And you'll see why that's significant in a minute. Next slide, please. Every 5 years, we work with Salisbury University, who does an economic impact study for us. And the food, feed, and fiber industries in the state comprise a little over $20 billion in economic impact. This is using 2019 data prior to the pandemic. So this is pre-pandemic data. And you can see there it supported about 90,000 jobs and about 750 million in state and local tax revenue. Horses, which are significantly produced in the state for recreation and other reasons, are not well picked up in this study. So it may well be there's another $1 billion of economic impact related to horses. Next slide, please. And of that 20 billion, you can see that traditional agriculture, as we know, it is about 16.5 billion. Maryland's forest industry is very important. It's about 3.3 billion, about 17% of the total economic impact. And Maryland's seafood industry comes in at about 1.5% of that economic impact. Next slide, please. I thought you'd be interested to see a regional breakdown. We have this report on our website, and it's there by county. So we have the county-specific economic impact data if you're interested in that. But we aggregated here by region. And obviously, the ag and resource-based business is important in the rural parts of the state. But I highlight the 5 counties in central Maryland. You can see that's 45% of this economic impact. So I thought you'd be interested in that. Next slide, please. So I mentioned the aging workforce. You all know about the loss of rural working land to development. Marbitka was established to deal with the problem of access of capital and credit, especially by young and beginning farmers, but not limited to young and beginning farmers. And so that's where we focus our mission and our work. Next slide, please. So back in 2004, you established Marbitka, the General Assembly did, and by 2007, we were operating. You can see there what we're focused to do. Because we are a quasi-governmental entity like TEDCO and MEDCO and some of the other economic development instrumentalities, we can work at the speed of business. We're not weighed down by bureaucratic delay. And we're very proud of that. In terms of our core loan programs, the average turnaround time from us to getting the application to issuing a commitment letter is 18 days. So we're working very rapidly, and we're very often working with commercial lenders in providing project financing. We have 20 programs today. It's every time I turn around, the General Assembly's got something else for us to do, and we thank you for providing resources for us to do those new initiatives that you want us to undertake. And we also play a role in bringing together the various public and private sector entities that work with our agricultural producers. Next slide, please. So what can we fund? What kinds of businesses do we finance? Commodity crops, table crops, seafood and aquaculture, particularly oyster farming, shellfish aquaculture, horticulture and horses, and of course, fiber production, which means in Maryland, timber as well as wool. Next slide, please. Given our unique ability to work with other levels of government and other private sector entities, we partner with everybody we can to leverage resources. And right at the top of the list are the commercial lenders and the 3 farm credit associations. We work with USDA, we work with MDA and DNR very closely. We work with Commerce. We work with the local, regional, and economic development offices, et cetera. Next slide, please. So you've heard about some of the other small business finance programs early in the hearing today. This is where Marbitco fits in. We're unique in that we're working in a space that only USDA occupies in part, and we're having a major role when it comes to young beginning farmers. This is where we focus our efforts: food production and food processing. That's where we fit in. We're not doing Main Street retail, and we're not processing foods from imported from outside Maryland. We're really focused on that Maryland production. Next slide, please. Our programming falls into three broad categories, actually 5 categories, as you see in a minute. Our core program funding, it was a result of legislation passed in 2006. This was landmark legislation, and it provided some regular funding for us through several years. It actually ends in 2025. And I'm pleased to tell you, Mr. Chair, Madam Chair, we are going to be self-sustaining with our core activities after fiscal 2025 because of that investment. We also receive funds from other levels of government, specialty funds from the legislature and the state. And we also work to preserve rural land through programs that also help young farmers. Next slide. I just talked about this capitalization of our core programs. And yep, we've got one more year coming, and we are going to be self-sustaining with respect to the core program. We primarily make loans, collateralized loans with those core program funds. We do fund some small grant incentives as well from that category. And then we have the 2 next generation programs. Those of you that served on the budget committee may remember that we received some special funding last year to augment our work in helping young farmers to both buy their first farms and put those farms on a path to being permanently preserved at the same time. Next slide, please. Here's an outline of what we've done over the last 16 years. Here's a breakdown. We were excited in June. We hit the $100 million mark. So that was a milestone that we were proud of. Over 1,200 projects going into that $100 million figure. Next slide, please. We always like to provide you with an overview of how we're doing with our loans and grant incentives. And here's a summary. You can see how we're doing there. Again, we're mostly making loans, but we have expended about $8.5 million in grants over the last 16 years. And we funded 14 next generation projects at $12.5 million. Next slide, please. This gives you sort of a regional look. All of this information is available on a by county basis if you're interested. And you can see here where we're expending our resources. You'll see that the Eastern Shore is doing pretty well, but there's a reason for that. 72% of Maryland's agricultural production is located on the Eastern Shore. So it makes sense that a large amount of our funding is directed to the Eastern Shore. But we've got projects everywhere, including funding projects in Baltimore City and Prince George's County for both urban ag and other kinds of activity. Next slide, please. Just a quick snapshot on our loan portfolio statistics. You can see there something under 500 loans approved, about $80 million. 225 of them, almost 50%, have been fully repaid, have about 250 open accounts. I'm knocking on wood, we have only had to foreclose on 7 of our borrowers. We're a small business lender. We sort of anticipate we'll have loan losses around 5, maybe 5 to 7%. That's sort of a metric for small business lenders. We're at 1.4% of all loans we've made where we've lost what we invested. And we risk rate our portfolio, and it's about 2.5% today. Next slide, please. I mentioned the next generation program. We have 2 of them. One is an easement option purchase program for farm properties over 50 acres. We provide 51% of the fair market value of the land only as a down payment with a cap of $500,000. And we give that farmer 4 to 7 years to sell the permitted easement to the Maryland Ag Land Preservation Foundation, the NR Rural Legacy Program, Land Trust, county program. We don't care. We want that land to be permanently preserved, but we do not administer permanent conservation easements. Next slide, please. We also started, because of the demand of small acreage next gen program for farms of between 10 and 49 acres in size. And with this program, we actually buy the conservation easement at the real estate settlement table and hand that easement to the permanent easement holder, typically MAL, the land trust, or a county program. Next slide. And here's a summary of how we've done with that those two next gen programs: 44 projects, 12.5 million, leveraging 17.5 million of commercial lender capital. Next slide, please. All right, demographic numbers. You folks, or this committee, has been interested in this in the past. We started in 2016 tracking the demographics of our borrowers and grantees. As you heard from Commerce, we cannot require that our borrowers and grantees return the forms. We're getting about, a return of about 55% back, but we're doing well by the evidence here. In terms of gender, 30% of Maryland principal operators are women. 30% of our projects have gone to women, of our project funding. 11% are veterans. 9% of our project funding has gone to veterans. And we actually have, since 2000, a 25% interest rate reduction, the basis point reduction for veterans on any core loan that we make. Next slide, please. And here's another look at how we're doing demographically relative to what we know from the Census of Agriculture. In 2012, 2.6% of Maryland farmers were minorities. That grew by 33% to 2017. So in 2017, 3.5% of Maryland farmers were minorities, according to USDA. Since we've been tracking the demographic information, 12.1% of our project finance has gone to minorities. So we're financing at a rate 3 times greater than demographics would suggest that we might otherwise be doing. So we're pleased with that. We think we're going to see the demographic number in terms of minorities grow with the next Census of Agriculture, which is being wrapped up this year, and the results will be produced a year from now. Next slide, please. New programs in 2023 and 2024. Senator Kathy Klassmeyer had a bill in 2022 establishing the Maryland Waterman's Microloan Program. We launched that last year. We also launched, with special funding that you provided us, a livestock processing grant program, which was a huge problem during the pandemic. Our farmers, because of the food supply chain breakdown, because of the pandemic, our farmers were waiting more than a year to get their animals processed. So we put some pandemic relief money into this sector, and you all wanting to continue to work in this area have provided additional funding for us. And also, I mentioned the forest industry, tremendous problem with the Luke paper mill in Allegheny County closing down almost 3 years ago, had a ripple effect across the entire state and regionally, actually. And so we've got some funds directed at the direction of a major economic report that was released, an economic impact strategy in that area. And then we've got 2 new programs, which we'll talk about in a second. So in terms of the Waterman's, next slide, please. In terms of the Waterman's Microloan Program, we can make loans of between $7,000 to $15,000 for basically folks that are commercial fishing on a full-time basis. And we fund 32 projects. So we had 53 applications, and we made loans of a little over $400,000. And you all provided additional funding for that program this year. It actually has 2 more years of funding, and then it ends. So the money will revolve. There's actually a 25% forgiveness component with this program. So the fund will eventually be self-liquidated. Next slide, please. I talked about the importance of the livestock processing support. We're providing matching grants for USDA inspected livestock processing facilities of up to $50,000, and for other USDA inspected facilities, $20,000. We received 6 grant applications last year at about $250,000. We're going to roll the remaining money over this year, and the appropriation we received this year is going to another program, which I'm going to talk about. Next slide, please. I talked about, again, the wood products and equity investment program, 14 applications, 10 awards, totaling about $341,000. And we're working closely with DNR, and we have that program on the street again this year. Very important. Pulpwood is an important part of the forest industry landowner base, and without having the small trees to support the growth of the big trees, it's hard to do the forest land management because of all the invasive species problems we have on the landscape today. And I won't go deeply into that, but that's an important issue for our forest sector. And again, it's a key part of our resource-based industry base. Next slide, please. As a result of legislation passed in 2022, we were just launched an oyster shucking house loan program. This was legislation introduced by Senator Sarah Elfreth as part of a larger oyster restoration and oyster shell recovery effort. And so we're launching that program. You all allocated $1 million to us. Loans of between $25,000 and $250,000. The interesting feature of this program is the borrowers can get debt forgiveness by returning oyster shells to DNR. And we've been working closely with DNR and setting up this program, and they're ready to roll when this program is fully underway. Next slide, please. The other new program we're launching this year is a result of a very competitive USDA grant program, which we were successful in. We received notice earlier in the summer that we're going to receive almost a $4 million award. We're matching it with Marbitco funding to establish a $5 million special loan pool for livestock processing projects. We have 18 small processors in Maryland. We would love to add another one to the mix. We actually don't have very many on the Eastern Shore, but we also have another problem with blue catfish. It's a major invasive species affecting the Chesapeake Bay. Some of our tributaries have 70% biomass blue catfish. They're eating blue crabs, rockfish, or other commercial species. We've got to get them out of the bay. We've got to get people eating them. Blue catfish is the only fish that has to be USDA inspected. So blue catfish facilities are eligible under this new program, and we're taking that livestock processing grant money that you've given us, and we're matching it to this program so we can provide 10% equity incentive matches to go with loan funds of up to $2.5 million per project. So we just launched that recently. Next slide, please. I'm getting close to the end here. Wanted to tell you we've been working very closely with the Food System Resiliency Council on their work over the last 2 years. And we've also been spending a lot of time working with stakeholders in the Maryland Department of Ag as it's setting up new urban agriculture grant programs. Urban Ag not only supports commercial farmers, but community groups, community gardens, nonprofits working with youth. And so we're very pleased that you all have passed 3 bills of importance over the last 2 years on that subject. And the final comment, we had a record year this year. We funded 126 projects with a little over $14 million. We hope to keep that streak going again this year. And we want to thank you very much for your support. Next slide. And with that, I'll be happy to take any questions you might have. So that was my last slide, Naomi. I think there's one more. Yep. Okay.
Thank you, Mr. McHenry. That was an amazing, comprehensive presentation, which I wonder if do you give that to the relevant committees in the House and the Senate?
Yeah, periodically, typically at the beginning of a 4-year term, we'll come in and do a briefing for both the Appropriations Committee and the Environment and Transportation Committee and the comparable committees in the Senate.
Great. Do we have questions from our members on the committee? I will just say one thing. I was surprised at the largest economic impact of the farming being in Central Maryland.
Well, it's relative, right? So the economy is much greater overall.
Right.
But I just wanted to make the observation that what's being produced in rural areas, some of it's goes to urban areas to be processed, and there's also food production in urban areas. We now have urban agriculture, which is growing. We have small operations in suburbia, in greenhouses and whatnot. So food is being grown everywhere. Obviously, all Marylanders need to eat, hopefully at least 3 times a day, right?
Right.
So
yeah, that was an interesting statistic. Also, I will note that we do have a female head farmer in the House of Delegates, newly elected in 2018.
Oh, yes. Yes. And she's on the committee.
Yes, she is.
Yes.
Senator Ellis.
Hey, Madam Chair, you're muted. I can't hear you.
I'm sorry, I was turning the meeting over to you for final comments and or any final questions.
Yeah. Thank you, Chair Watson. So thank you, Mr. McHenry, for your presentation. Just tremendous resource. Agriculture is a large part of the Maryland economy. And, there's so much more we could do to make it even more profitable part. I think there's a country in Europe, I think it's Norway. Their largest exports are the agricultural sector. In cities, they're growing tremendous amount of vegetables, and it's amazing with modern technologies that it's not basically farm rural based, but it could be city based also.
Right.
Just the growing, the production, the growing, the processing. It's just a tremendous industry that we could really work to provide quality middle class jobs for Marylanders. So thank you for for what you do. Thank you for your presentation. One thing I'm concerned about, over the decades, the discrimination that Black farmers have faced in the agricultural industry, as being basically forced out through USDA programs. A lot of them are administered by local agencies throughout the state with loans and with grants. It just really has been a tremendous, effort to push Black farmers out of the industry. And Maryland is kind of like guilty with that too, as far as with the tobacco settlement. Most of our farmers had a lot of tobacco growers in Maryland. The Black farmers were, they lease the land they grow tobacco on. So tobacco settlement funds, hey, you have to own the land. So they didn't participate in that. So just policies that we've come up with in Maryland has tremendously harmed Black farmers and their economies. And whether intentional or not, they've harmed us. So I would love to work with you with that particular area, especially with the loan programs. If you could provide a breakout to us, like who you're working with. You generally put by gender, but I like to see by race.
Yep.
Maryland, and work with you to kind of do our part in Maryland to reverse that long-term demolition derby when it comes to Black farmers, because farming is a business, and if we destroy those businesses, those farmers, we're destroying their business as a way of livelihood. And I know that there is a tremendous interest in the resurgence of farming, not just in the city, like I mentioned, that I think Norway have urban farming that's very much producing a lot of produce. So you can share that with us later on, please. And
I'll be happy to do that.
Touch with you to really get that in the interest of time.
Yep. We think we're helping to move the needle in that regard. And we hope to see that reflected in the census of agriculture, and certainly our demographic numbers, again, starting from a very low point, we're working at 3 times the rate of actual minority farmers in the state. So we like to think we're making a difference, and we have more work to do.
Well, thank you. Appreciate that. Well, thank you, Mr. McHenry. Thank you, committee, for your time. And we're a little bit 10 minutes over. And so I appreciate that attention, and we'll call this meeting adjourned.